Hi, I'm Michael Fernandez, and I'm going to be your primary instructor for today. Let's get started. You as a business buyer going out there to source deals should have a clear criteria of what you're looking for. So at the basic level, we're going to look at the revenues. In our case, we're saying we will look at any company that must at least have $1 million in revenue up to 50 million. Some of you may be looking at buying smaller businesses, and those may only have a couple $100,000 in revenue, or they might not have any revenue whatsoever, and it's just the assets that you're buying, and you can go ahead and generate the revenue. But whatever it is, you should have a criteria that you're looking for. In our case, we also look at profitability. In this example, we're saying that you should be looking at businesses that have 200K in, and we will call free and clear cash flow, or someone else might say this seller's discretionary earnings, which there's a distinction between those two to be covered in another class. And you're also going to be looking for businesses where you can go ahead and get a return on invested capital of above 20%. Now I often get the question, well, why above 20%? Why doesn't it, why can't I buy a business and look for something that's going to get me a return on invested capital of maybe 10 or 15%? And we'll be talking about valuation and return on investments in another class, but just a quick comment here is that when looking at a private business, it's a much riskier process, it's a longer process, and you should be expecting to get a much higher return from executing a private deal, a private transaction, than you would if you invested in stocks or bonds in public companies. So you definitely should be looking for transactions where you can make money. I mean, it sounds obvious, but I want to make sure it's crystal clear. Now, in our case, let's go through this quickly. So structure, we're looking at buyouts. In our case, it's a lot of the transactions what we're offering, and we teach people is that you're going to be buying the business with some of your equity or equity that you raise, and you're going to raise money from a bank or seller's debt to put leverage on the business so you can make a higher return. In that case, we're calling those buyouts. So there's think of these as like mini leverage buyouts. You should have a focus of what you're looking for. Are you looking for growth sectors? Are you looking for businesses that are in high tech? Are you looking for food businesses? You should have a specialty. We have found that those buyers who focus in a specialty, we think they tend to do better or are better buyers than the buyers who just very, very general. It's very difficult to be a good generalist. You can be a generalist firm and have specialists within your firm, but to be an individual who's a generalist looking at any business, we believe that you may be at a disadvantage to another firm that's a specialist. You should be looking at businesses that have great growth potential. In general, they should be businesses that are growing faster than the market that they're in or than their competitors. And you should have your capital commitments in place for this business. And one last thing about the company criteria is that you need to decide whether you're the one who's going to step in and run the business or if you're looking to buy a business that has a management team in place.